Good morning, welcome back to AM, 20 minutes away from 9 o'clock. Last month, the Reserve Bank decided to keep the OCR, the official cash rate, the same. And many economists have poured cold water on any hopes there might be a reduction soon. So what does this mean for our interest rates? Thanks to our partners at Property Apprentice, financial advisor Debbie Roberts joins us now. Great to have you back on the couch. Debbie, maybe let's start off by giving our viewers a crash course on the OCR and what it is and why it's used to control inflation.
Sure. So, yeah, the Reserve Bank uses the OCR as a tool to either reduce inflation or to stimulate the economy, depending on what stage we're at. So at the moment, we all know inflation's high, so that's why the OCR is high. And it's been high since May last year now, so that's when it reached its current level of 5.5%. So the thing is, with the OCR increasing, that tends to increase the interest rates on mortgages as well as the interest rates on savings accounts. But what we've seen recently is interest rates have been coming down even though the OCR's remained unchanged. And it's quite a common question. People have said, why are interest rates coming down when the OCR's on a fixed rate? So one of the things that also influences interest rates are swap rates or wholesale interest rates, because banks borrow money before they lend it out. So when swap rates are reducing, that brings interest rates down as well. So, yeah.
So the official cash rate is the rate that the central bank then charges our other banks to lend out money. So when it's more expensive for them, they then put the interest rates for all the rest of the population up. So it's more expensive for us, and that means that we'll spend less on everything else.
Exactly.
Therefore, hopefully inflation will come down.
Yes. So when we're spending less in the economy, that brings inflation down. And, you know, especially with mortgage rates increasing, there's less money for people to spend. Anyone who's got a mortgage who's refixed recently feels that pain. And we're all obsessed by when interest rates are going to start coming down. So it has been nice to see the interest rates trimming back. But yeah, it's one of those things. At the swap rates or the wholesale rates, they started coming down around October last year. And the banks did not move any of their interest rates. And to be fair, I think the Reserve Bank was quite pleased with that, because if the banks had started dropping their interest rates, that could have had a more more stimulation in the economy. But the banks kept the margins, so they were banking more profit. I mean, at the end of the day, we do want our banks to be profitable. We don't want them to go into trouble, you know. But now we're starting to see banks starting to reduce the interest rates because they've had margin to play with. And I think now the Reserve Bank wouldn't be too upset about the fact that banks are reducing their interest rates, passing on some of that benefit to the public. Because
inflation's still being as stubborn as a dog, though.
Yeah.
So why is it? So inflation's being stubborn. It's not coming down as fast as the Reserve Bank wants, but banks are still lowering their interest rates. Not hugely, but they are slowly reducing them.
Yeah, exactly.
Why?
So I suspect it's one of those things where, you know, banks have also got this reputational risk. So, you know, it's very, they tread a fine line. You know, if the general public started going, banks are just banking all this extra profit, even though their wholesale rates have been coming down, that's a threat for the bank's reputation. So, you know, they don't want to be seen as just profit grabbing. So, so that's possibly part of it. But also it works in the Reserve Bank's favour at the moment, because when they're passing on lower interest rates, the Reserve Bank doesn't have to reduce the OCR. So it enables the Reserve Bank to keep the OCR high so that they can say, we're doing our bit, you know, but banks are able to pass on a bit of that margin so that it eases a bit of pressure for those in the market. We've still got a huge number of people that are coming off fixed interest rates this year and having to refix. We've got the GDP results coming out tomorrow, which will tell us how well the economy is performing. No one's expecting that to be stunning, are they? So, yeah, so I think inflation, the next inflation results come out a week after the next OCR announcement. So the Reserve Bank's going to be looking at all of this data really carefully before they decide when they're going to reduce the OCR. Do
you know what the OCR, or what do you think the OCR will do, given, I mean, when you look at all of those things, the GDP figures, you talk about the government saying, well, look, we're broke, the figures are really bad. Do you think the OCR is going to hold, or are they going to move it up?
I think they'll hold it. I think they've done enough. I reckon there's more than enough pain in the economy at the moment. Look at how many redundancies we've seen recently, how many building companies have gone into liquidation. You know, that's a huge part of the economy that's really struggling. So I think they've done enough. I don't think they'll make a change in the April announcement because inflation results come out a week afterwards.
Fascinating stuff. Thank you very much, Debbie. It's wonderful having you here.
Thank you.
Thanks to our partners at Property Apprentice. That was Debbie Roberts, Property Apprentice owner and financial advisor.